Sides are being taken this morning. So which side are you on? Let's go ahead and take a look at what folks are saying. But first of all, let me know that there's a programming change today. We will have Larry Goldberg on finally in a few hours, probably around 10:30 this morning. And he will be talking about the compensation package, and Dan Ives and Ross Gerber and Gary Black and AJ and everybody has been chiming in with regard to the compensation package, with regard to Tesla's current situation. And yeah, we'll see. I'm going to set it up right now, but then Larry Goldberg will be later. He'll be able to add more color to it later this morning. All right, well, let's start with what he had to say this morning right off the bat on X. He says, I have to disagree. He has to disagree with his idol, Dan Tech. I'm sorry, Dan Dives Tech, also known as Dan Ives. In this one, he was talking about Ross Gerber, who had made some comments last night and again this morning on CNBC with regard to Elon's compensation package. He says, in this one, Ross clearly has not read the 443-page 2024 proxy statement that details the scrupulous, thoughtful, and comprehensive process conducted by the special committee of the board, Kathleen Wilson-Thomas and her advisors, Sidley LLP, Abrams and Bayless of Delaware, and Houlihan Lokey Capital Inc. Regardless of the criticism Ross may have leveled at the board in the past, this particular critique is entirely without merit and is wrong on the facts. The board's, which is not that uncommon for Ross, the board's process in this case was scrupulous, comprehensive, and thoughtful. It is excruciatingly detailed in this document, exactly the opposite of Ross's meritless charge that the board simply said, let's have a do-over without giving it a thought. Ross may disagree with the board's decision, but his criticism of the methods are groundless and show a studied disregard of the facts so readily available. His criticism reflects on him, not the board, and highlights the very reason why he is not fit to serve on a public company board. Dan Ives had said this. He says, I beg, and this is also on X, he says, I beg you to read the proxy statement, determine the facts for yourself. Meanwhile, there have been additional downgrades, but it is likely the downgrade from Deutsche Bank. This is me now, I'm sorry. I should put some breaks in from time to time, don't you think? There have been additional downgrades this morning, but I'm guessing that the downgrade from Deutsche Bank is likely having the biggest impact this morning. Okay, so this is from investing.com. The bank cut its rating for Tesla to hold from buy. It's not sell, to hold from buy in a note, lowering the price target to 123 from 180 per share. Deutsche Bank believes that there is considerable risk from going balls to the wall for autonomy following recent news and the likelihood of a Model 2 push out and the company's change of strategic priority to robotaxi. Deutsche Bank has previously warned investors about downside risk to Tesla's deliveries, pricing, and earnings through 2025. However, the long-term buy rating was predicted on the next-gen vehicle priced at $25,000 coming late next year, which they felt would allow the company to re-accelerate volume, margins, and free cash flow, and potentially come to dominate the Western electric vehicle market. It is believed that pushing out Model 2 will create significant earnings and free cash flow pressure on Tesla's 2026 estimates and make the future of the company tied to Tesla cracking the code and full driverless autonomy, which represents a significant technological, regulatory, and operational challenge. They go on to say, we view Tesla's shift as thesis changing. That is exactly correct. It is thesis changing. And worry the stock will need to undergo a potentially painful transition in ownership base with investors that were previously focused on Tesla's EV volume and cost advantage potentially throwing in the towel, and then those people will be eventually replaced by AI tech investors with considerably longer time horizons, argues Deutsche Bank. The bank feels the delay of the Model 2 efforts will create the risk of no new vehicle in Tesla's consumer lineup for the foreseeable future, which will put continued downward pressure on its volume and pricing for many years, requiring downward earnings estimate revisions for 2026 plus. Has everybody forgotten about the Cybertruck? Has everybody forgotten? I'm assuming there will be a Juniper version of the Model Y coming up on the best-selling car in the world. Has anybody forgotten that we've just had the complete revision of the Model 3, a 50% of every part in the car revision of the Model 3, which apparently is selling very well, and should be. If it's not, I don't know why it wouldn't be. Anyway, those look like model changes to me. And well, we'll have some more things to say about this as we go along this morning. By the way, this is Randy Kirk. And as I noted a minute ago, Larry will be here around 10:30 California time to discuss all of these issues. And then tonight, Bradford Ferguson will be surely chiming in again on these issues, and they will have developed by then, and we'll have even more to say about them. Please hit the like button. If this stuff even sometimes entertains you, I think it's better than regular television. And then maybe that's a low bar, and then hit subscribe if you haven't already done that, and notify, and then, hey, join Patreon. That'd be great. Thank you so much. Several people this month have been joining, and that's super. I'm really do appreciate it. So ahead of the company's earnings, Wells Fargo analysts said they expect a quarter-one miss from Tesla. Yes, everybody thinks that, with expectations low after weak deliveries. Meanwhile, UBS reiterated a neutral rating on the stock in a recent note. They highlighted plateauing electric demand and more China competitions as factors that could impact Tesla's near to midterm growth. Following a survey, UBS noted that in China, Tesla shows negative momentum year on year compared to premium and top-end Chinese electric vehicle brands. That's not even remotely true. There's no other brands in China that are not showing negative momentum. In fact, they're showing worse negative momentum than Tesla. I don't understand that one. They also stated that U.S. interest in owning a car they can drive autonomously was flat year on year. Okay, nobody's going to sit there and say, oh yeah, that's exactly what I want to do, until they do it. The majority, 55%, still indicated they would want to pay for such a feature as a lump sum. That's an interesting statement. I guess they did some polling here. They'd prefer to pay for a lump sum. In our view, we believe the current 12,000 FSD purchase price would need to come down to see higher levels of adoption, according to the investment bank. All right, now let's get into the guts here. You look, in the world of punditry, if you're going to be an analyst and you're going to go out there on a limb and you're going to make statements about where you think stocks are going, where you think the economy is going, where you think interest rates are going, it is really hard to make predictions, right? I mean, if we could do it and do it successfully more than 50% of the time, just that would allow us to become super wealthy. But I say on this channel over and over again, whether it's me, Gary Black, Brian, either of the Brians, Brian Wong has a reputation for being excellent at making predictions. He's even proven it, by being part of that website whose name I can never remember, where they rate his predictions. But it is really hard to do. When you're following a pundit, don't follow them for their ability to get the number right, because that's craziness. They'll get it right this year, and this guy that got the best number this year is the guy that blows it next year and can't even get close. Now, that's not 100% true when it comes to like predicting for next week what the earnings might be. That's that's something that you have a lot of data that you can come to understand. But in terms of looking at a stock price, you never know what's going to happen between now and then. There's things like wars. So check out their analysis, check out the way they get to their numbers, and then you utilize that information in terms of making your own investment thesis and your own investment plans. Well, okay, so let's see what Gary Black says this morning. This is his investment thesis. Investors ask why Gerber Kawasaki gets asked back. Ross Gerber of Gerber Kawasaki gets asked back on CNBC regularly to talk about Tesla. Short answer, Ross is highly credible after being correctly cautious on Tesla over the past 12 months as other bulls spun any Tesla news as positive, despite clearly deteriorating fundamentals that have caused a 50% and 44% collapses, respectively, on Tesla's full year 24 and 25 earnings estimates. Yeah, it's caused a collapse in their earning estimates of the past year, including 27 and 31 respectively year to date. So AJ, who I'm getting to like more and more, by the way, you can follow him at ALOJOH on X. He says, please read below, all in caps. Gary Black masterfully deceives people in this post. Since Gary's thesis on Tesla is similar to Ross, Gary uses Ross as a thinly veiled avatar of himself, or clearly tries to pat himself on the back. As is prototypical for Gary, Gary denies his vast following critical context. This following critical context that AJ is going to provide us. Gary speaks about the last 12 months. So let's review what happened. Number one, unforeseen higher interest rates. Fewer expected 2024 rate cuts created market-wide pressure. At the beginning of this year, we thought there would be 3, 5, 6, 7 cuts. This year, dropping interest rates dramatically. In fact, Gary Black specifically was expecting 3.25 before the end of this year. That's Gary Black. That was his number. By the way, I thought so too. Number two, unforeseen logistical challenges. The Red Sea, the Houthi hostilities threw a massive wrench into global vehicle shipments. Number three, unforeseen arson attacks on Tesla's Berlin, shutting down production. Number four, a judge struck down Elon's compensation package. It was a huge unknown. Number five, global auto competition is taking huge losses in its fight with Tesla. Ford and others other BEV businesses are deeply loss-making. Just to snatch a few sales from Tesla, they have even special incentives despite their losses. Tesla, they're cutting back on their plans. They're doing all this stuff anyway. And then finally, significant military conflict, Israeli-Palestinian conflict breaking out, creating major tensions in the Middle East, driving oil prices back to temporarily $90 a barrel. And then 7, unforeseen inflation issue. Inflation proves to be much stickier than expected by literally everyone. And weirdly, nobody was expecting business to continue. Except one pundit. Oh yeah, I know. For a minute there, I said I thought, for 1 month, I gave it a 60-40 in terms of a possible recession for 1 month out of the last 15. All this stuff helped Gary Ross' bearish Tesla stance. Now they look like a genius, but simply got lucky. Without all these unforeseen events, Gary/Ross would look like the greatest losers right now. Gary, I'm going to put this in because he wrote it. The losers indeed they are. Gary Ross just got extremely lucky and now sell it misleadingly as a stroke of genius. And he says this is despicable. Now, I don't like the language that AJ is using. I don't like that approach. That's why I was hesitant to even say it. I don't think they're losers. I just think that this is incorrect to take credit for something that they could not have possibly foreseen. And every one of these items, in my opinion, unknown and unknowable or predictable by any analyst, explain why the stock is where it is right now and has little to do, almost nothing to do with Elon or the board. Personally, I believe that full self-driving will be complete by 8/8, if not before. And when it is complete, the stock will be one of the best investments in history for those smart enough to buy low. And that's not investment advice. But if I was talking to my own kids, I'd be telling them, buy now, buy now. It's still not investment advice for you. I also believe that Tesla will see much higher car sales this year than anyone is expecting, at least partially due to the fact that FSD will become available as a complete deal and people will see the benefit and they'll start buying the cars for that reason alone. But I think that Tesla will be making moves. They're already making moves. You can buy a Model 3 right now, or lease a Model 3 for $29.99 down and $299 a month. There is no better lease on the market right now. And so that's just one of the things they're going to do. They've got zero interest rates in Germany and China right now. I expect to see 0 or 2% interest rates following in other markets. I expect the advertising, they're going to get that, they're going to figure that out, and then they're going to pump it up. Anyway, there's a lot of stuff's going to happen, and the numbers are going to be much better than expected. Anyway, Jeff Lutz adds this in his post this morning. He says, replying to Gary Black, when and where did Tesla say they're delaying the compact? Does a manual not understand what a vehicle platform is and what the unboxed method represents? If Tesla says they're not doing a compact variant, then okay. But there's more definitive ways to find out than reading Reuters. So far, absolutely nothing from Elon, nothing from the company saying that they delayed or stopped any thoughts about the compact car. By the way, you've heard me say, I'm completely missing it with regard to the compact car in terms of why it's so critical, except for putting FSD on it. Yes, it will increase the total volume and it'll increase Tesla's position in the marketplace, et cetera. But I'm much more excited about the Model Y refresh and the Cybertruck because and the semi truck, et cetera, because those things are adding big numbers to the bottom line instead of much smaller numbers per unit. Anyway, let's turn to the economy now. Initial jobless claims stayed flat again at 212,000. There was two different headlines. One said 212, one said 211. It doesn't really matter. The Fed Beige Book report, this is from CNBC, I think. The Fed's Beige Book report on Wednesday described employment as rising at a slight pace overall since late February, adding that several districts reported improving retention of employees and others pointed to staff reductions at some firms. It also noted that even as labor supply has improved, many districts describe persistent shortages of qualified applicants for certain positions, including machinists, trades workers, and hospitality workers. Yeah, I expect that to continue. That's the kind of economy that we're in, and people that have young people that are 18, in their teens and their 20s right now, trying to decide what careers to pursue, should really consider the trades. These are not going to go away in the AI world. I'm talking about plumbers and electricians and roofers and things of that nature. They're not going to go away in this AI world, not even with robots. Data next week on the number of people receiving benefits after the initial week. This is the one I watch, what happens later, not what happens this week, what happens after a week or two or three. This is a proxy for hiring, offers more clues into the state of the labor market. The so-called continuing claims edged up 2,000 to 1.812 million during the week ended April 6th. Though this is still low by historical standards, the slightly elevated level of continued claims suggests that it could be taking longer for some of the unemployed workers to land new jobs. Now, this had been going up, inching up, but it did go down last week and now is starting to inch up again. So that's the number to watch as far as I'm concerned. This is indeed CNBC reporting that U.S. Treasury yields edged higher on Thursday as investors, and we'll check that out in a second, make sure that's still true, but last time I looked, they were up 3.3 basis points. As investors examine fresh economic data and comments from the Federal Reserve officials as they weighed the outlook for interest rates. The yield on the 10-year Treasury rose by less than 3 basis points. It was, last time I looked, it was above that. Yields and prices move in the opposite direction, of course, and 1 basis point equals about 0.01% on the underlying value of the bond. Yields took a leg up after the Philadelphia Federal Reserve's manufacturing survey came in much higher than economists forecasted. It jumped to 15.5 for April, well above the consensus estimate of 2.5 from economists that were polled. Okay, right now, most Tesla stockholders are probably wondering, is the bad news now all baked in? Obviously, some analysts feel there is more downside potential. I just read about one. I have said earlier this year that it's entirely possible for Tesla to test the 107 low. Could happen. It's absolutely could happen. When sales and earnings are not growing at that 50% per year, or even 40% per year, or even 30% per year, that PE is going to suffer. When interest rates are higher for longer, that affects the discount rate on future earnings in terms of how you value the stock today. So the two things that are most important in creating a value for a stock, both of those are being impacted right now. No matter what anything else that we're talking about, if you've got fewer sales and less earnings in your projection and interest rates are higher, that's going to affect today's stock price. But the real question today is, what do investors think about Optimus, Robotaxi, and Dojo? What are those worth in 2026? And for those trying to justify their decision to hold and ride out this period, go back and read HA's note. None of us could have predicted any of this. Gary and Ross did not. They never, ever said that Tesla would be down due to a war in Israel or interest rates staying higher for longer. I know they didn't predict that because I read them every day. Okay, how is Tesla and the rest of the market reacting to all of this? Okay, Tesla is down $5 at 150.45. NASDAQ down 38. The Dow Jones up 194. Remember, it was down way more than the NASDAQ, so now it is responding back up, bouncing better. But the NASDAQ down 36 and the Dow up 195. S&P up 336. The magnificent the other six of the Magnificent Seven all down except for Meta. That is up $7.47. By the way, did everybody predict, did Gary Black predict that NVIDIA would be down 110 points, over 10% from its high of 950, sitting at 840 this morning? I don't think so. By the way, Meta just jumped up, man, a bunch, but I'm sorry, not Meta, I'm sorry, NVIDIA. No, yeah. So Meta is up this morning, but the rest are down. And the Cathie Woods are mixed this morning, very narrow though, like up 2 cents, down 4 cents, etc. All right, so the market therefore is mixed. Everything's mixed. Let's go on and take a look at how bonds might be impacting all of that. You have got the 10-year. Let's make sure this is right. Okay, yeah. See, the 10-year is going up strongly right now. The I'm sorry, not the bond itself, but the yield up 4.4 basis points, back up to 4.629. We've got the 2-year also up about the same, 4.8 basis points at 4.98, which is roughly 3.6, which has been where it's been in the last 3 or 4 months. Has normally been around that 35 basis points higher. And the 2 months is only up 0.05, but I mean 0.5% this morning, 5.5% of a basis point at 5.393. And then let's go ahead and take a look at looking at the headline right now. March home sales dropped despite a surge in supply. We'll look at that information later. And what is Bradford Ferguson and I will talk about that tonight. Okay, let's go ahead and look at the rest of the numbers here. Let's take a look at oil. Oil is flat this morning, 82.73. Brent at 87.18. Both of those dropping precipitously from a few days ago, as things in the Middle East seem to be calm right now. Natural gas up 2.45% this morning after dropping for 3 days in a row. It's at 175. You've got gold gaining again on a slightly weaker dollar. Yeah, I don't know that I think this is people grasping for straws to figure out why gold is going up or down. Gold is sitting at 2,396, still under that 2004 that it had broken through last week. Copper up 1%, over 1% this morning at almost $4.40. Again, interesting to watch and see if that is related to the future of the business cycle, or whether that's more about copper specifically with all of these data centers going to be manufactured. Okay, the dollar taking a breather this morning. A little bit off this morning. And then we've got the Bitcoin up 1640 this morning at 62.7. How many predicted that with the halving today that the Bitcoin would be down over over $10,000 from last week, from a couple of weeks ago when it was at 73. How many got that? So I want to go back over, I didn't mention the percentages on the stocks this morning, the equities this morning. So you've got the Dow Jones right now up 161 or 0.43%, S&P up 0.2, up 3.51 or 0.07%, NASDAQ down 23.95 or down 0.15%. Let's go back once again and take a look at Tesla. $5.77 now, so it's broken slightly under 150. Be interesting to see what happens the rest of the day. No matter what your position is on the stock, how it is impacted by all of this news today will be interesting just from an analytical standpoint. All right. Yesterday, I had a conversation with Scott Walter. There were issues with my YouTube channel yesterday. Not sure exactly what those issues were. They could have something to do with conservative things that I'm saying on my new program, the new program that maybe you've seen, where I list every single comment by Elon Musk on X, every single comment, every single post that he makes. I list them and I give some analysis on those. And that program has been doing extremely well until yesterday. And all of a sudden, it wasn't doing so well. So anyway, but then the Scott Walter thing didn't do well. And I tried it 3 different times, and all 3 times, I couldn't get any traction. It was very weird. But if you missed it yesterday, I'm going to highly recommend you go back and look at it. We're talking about that new Boston Dynamics, kind of their version 2 of Atlas. There is the card. Go check it out. Later today, just in a couple hours, 3 hours, we'll have Larry Goldberg on. You're not going to want to miss that today. I'm quite convinced he will be very passionate in his opinions about what's going on right now. And then Bradford Ferguson this evening. It has been great, as always, talking to you this morning.